Welcome back to Bonnie's Life, where we explore the financial frontiers that are reshaping our world. I'm Bonnie, and today we're taking a journey to a continent that's quietly becoming the most exciting cryptocurrency market on the planet. We're talking about Africa, and specifically three countries that are absolutely crushing it in the crypto space: Nigeria, Kenya, and South Africa. If you think crypto adoption is impressive in the West, wait until you see what's happening in these African powerhouses. Before we dive in, make sure you hit that subscribe button and ring the notification bell because this is exactly the kind of groundbreaking financial content that YouTube's algorithm sometimes struggles to surface. Trust me, by the end of this video, you'll understand why some of the smartest money in the world is paying very close attention to African crypto markets. Let's start with a question that might surprise you. Which country leads the world in peer-to-peer cryptocurrency trading? If you guessed the United States, China, or maybe Germany, you'd be wrong. The answer is Nigeria. Yes, Nigeria. This West African nation of over 200 million people has become the undisputed global champion of P2P crypto trading, and it's not even close. According to Chainalysis, Nigeria ranks first globally for P2P exchange trade volumes and second overall for cryptocurrency adoption. We're talking about a country that received approximately $59 billion in cryptocurrency value between July 2023 and 2024. To put that in perspective, that's more crypto volume than most developed nations see in their entire financial systems. But here's what makes this even more fascinating. This isn't happening because Nigerians are speculating on meme coins. This is happening because cryptocurrency has become an essential financial tool for survival and prosperity in an economy where the traditional financial system is failing millions of people. The Nigerian naira has lost over 70% of its value against the dollar in recent years. Inflation is running rampant. The banking system is inefficient and expensive. For many Nigerians, especially young, educated professionals, cryptocurrency isn't just an investment, it's a lifeline. It's how they preserve their wealth, conduct international business, and access global markets that would otherwise be completely out of reach. This has created what I call the necessity adoption phenomenon. Unlike in developed countries where crypto adoption is often driven by speculation, in Nigeria, it's driven by genuine economic need. When your local currency is collapsing and your government is imposing capital controls, Bitcoin starts looking less like a risky investment and more like a rational financial decision. The numbers are absolutely staggering. Recent surveys show that 46% of Nigerians owned or had owned cryptocurrency in 2023. That's nearly 1 in 2 people. For comparison, crypto adoption in the United States is around 14%. Nigeria isn't just leading Africa in crypto adoption, it's leading the entire world. Nigerian developers and entrepreneurs are building some of the most sophisticated crypto infrastructure on the continent. They are creating solutions for remittances, cross-border payments, and financial inclusion that are being studied and replicated around the world. However, this success hasn't come without challenges. The Nigerian government has had a complicated relationship with cryptocurrency. In 2021, the central bank banned banks from facilitating crypto transactions, which only drove more activity to P2P platforms. The government has imposed significant fines on crypto platforms, totaling over 1.3 billion naira in recent years. Interestingly, the same government that's been cracking down on private cryptocurrencies launched its own central bank digital currency, the Naira, in 2021. But here's the irony. While Nigeria leads the world in private crypto adoption, the Naira has struggled to gain traction. It's a perfect example of how organic bottom-up adoption driven by real economic needs often trumps top-down government initiatives. The regulatory landscape is evolving rapidly, though. The Investment and Securities Act of 2025 is reshaping how Nigeria approaches cryptocurrency regulation. The government is beginning to recognize that rather than fighting crypto adoption, it might be better to regulate and tax it. Now let's talk about Kenya, because Kenya's crypto story is fascinating for completely different reasons. While Nigeria's adoption is driven by currency instability, Kenya's crypto growth is built on the foundation of the most successful mobile money system in the world, M-Pesa. Kenya has been a pioneer in digital payments for over a decade. M-Pesa, launched in 2007, revolutionized how people think about money in Kenya. Today, over 90% of Kenyan adults use mobile money services. This has created a population that's incredibly comfortable with digital financial services, making the transition to cryptocurrency much more natural. Kenya currently ranks 21st out of 155 countries in the Global Crypto Adoption Index, with approximately 6 million crypto users. But what's really interesting about Kenya is how cryptocurrency is being integrated into existing communities and economic systems. Just last week, there were reports about Bitcoin adoption in Kibera, one of Africa's largest urban slums. A Kenyan company called AfriBit Africa has been introducing Bitcoin into this community through crypto-denominated grants to local garbage collectors and other workers. What started as an experiment in 2022 has grown into a functioning Bitcoin economy where residents are using cryptocurrency for daily transactions. This isn't just a feel-good story about financial inclusion. It's a glimpse into the future of money in developing economies. When traditional banking infrastructure is inadequate or non-existent, cryptocurrency can provide financial services directly to people who need them most. The residents of Kibera aren't using Bitcoin because they're crypto enthusiasts. They're using it because it works better than the alternatives. Kenya's government has been relatively progressive in its approach to cryptocurrency regulation. In January 2025, the National Treasury released a draft framework for cryptocurrency regulation. Unlike some countries that have taken a hostile approach, Kenya seems to be trying to balance innovation with consumer protection. However, there are some concerning developments. The government has proposed a 1.5% tax on cryptocurrency transactions, which could significantly impact adoption, especially among lower-income users who are most sensitive to transaction costs. There's a real risk that excessive taxation could push crypto activity underground or to neighboring countries with more favorable regulatory environments. Now let's turn to South Africa, which represents yet another model for crypto adoption in Africa. While Nigeria's story is about necessity and Kenya's is about innovation, South Africa's crypto market is characterized by regulatory clarity and institutional adoption. South Africa has become the first African nation to implement a comprehensive licensing regime for cryptocurrency exchanges. The Financial Sector Conduct Authority has created clear rules for how crypto businesses can operate, which has attracted significant investment and innovation to the country. The South African crypto market is projected to reach $615.5 million in revenue in 2025, with strong annual growth expected. But more importantly, South Africa is leading Africa's DeFi revolution. The country has become a hub for decentralized finance innovation, with local developers building sophisticated protocols and applications. What's particularly interesting about South Africa is how institutional adoption is developing. Unlike Nigeria, where crypto adoption is primarily retail-driven, South Africa is seeing significant interest from traditional financial institutions, corporations, and high net worth individuals. South Africa also leads Africa in merchant crypto payment adoption. According to recent surveys, South African businesses are increasingly accepting cryptocurrency payments, making the country sixth globally in merchant adoption. This is creating a virtuous cycle where increased merchant acceptance drives consumer adoption. The regulatory environment in South Africa is particularly noteworthy because it demonstrates how thoughtful regulation can actually accelerate crypto adoption rather than hinder it. By providing clear rules and licensing requirements, South Africa has created an environment where legitimate crypto businesses can thrive while protecting consumers. Now, let's zoom out and look at the bigger picture, because what's happening in these three countries is part of a larger transformation that's reshaping the global financial system. Africa's cross-border payments market is currently valued at $329 billion and is projected to reach $1 trillion by 2035. That's a compound annual growth rate of 12%, which is absolutely massive. Traditional cross-border payments in Africa are expensive and slow. The average cost of sending remittances to Africa is around 8%, which is far higher than the global average. For families who depend on remittances from relatives working abroad, these fees represent a significant burden. Cryptocurrency offers a way to dramatically reduce these costs while increasing the speed and reliability of transfers. Stablecoin adoption is particularly interesting in the African context. While Bitcoin gets most of the headlines, stablecoins are actually driving much of the practical crypto adoption across the continent. Stablecoins provide the benefits of cryptocurrency: fast, cheap, borderless transfers without the volatility that makes Bitcoin challenging to use for everyday transactions. The numbers are impressive. Stablecoin transaction volumes hit $6.3 trillion annually by early 2025, accounting for 15% of global cross-border payments. A significant portion of this volume is flowing through African markets as people use stablecoins to preserve value, conduct business, and access global markets. This is creating new opportunities for African businesses and entrepreneurs. A software developer in Lagos can now easily accept payments from clients in London or New York. A farmer in rural Kenya can access global commodity markets. A small business owner in Cape Town can source inventory from suppliers around the world. But let's talk about the challenges, because the African crypto story isn't all positive. Regulatory uncertainty remains a major issue across the continent. While South Africa has created clear rules, many other countries are still figuring out how to approach cryptocurrency regulation. There are also significant technical challenges. While mobile network coverage is improving across Africa, internet connectivity is still unreliable in many areas. Power outages are common. These infrastructure challenges make it difficult to build and maintain sophisticated crypto applications. Security is another major concern. As crypto adoption increases, so does the sophistication of fraud and scams targeting African users. Many people are new to cryptocurrency and may not understand the security practices necessary to protect their funds. The demographic factor in African crypto adoption is absolutely crucial and often underestimated. Africa has the youngest population in the world, with a median age of just 19 years. This isn't just a statistic. It's a fundamental driver of crypto adoption. Young people are digital natives who grew up with mobile phones and internet connectivity. In Nigeria, for example, over 60% of the population is under 25 years old. These young Nigerians are entering the workforce at a time when the traditional economy is struggling to provide opportunities. Many are turning to the digital economy, one like freelancing, e-commerce, content creation, and cryptocurrency provides the financial infrastructure that makes this possible. The remittance market in Africa deserves special attention because it's one of the clearest use cases for cryptocurrency adoption. Sub-Saharan Africa receives over $54 billion in remittances annually, and the traditional cost of sending these remittances is crushing families who depend on this money. When someone working in Europe sends $100 to their family in Nigeria, traditional services might charge $8 to $12 in fees. Cryptocurrency can reduce this to under $1. But it's not just about cost, it's about speed and reliability. Traditional remittance services can take days or even weeks to process transfers. Cryptocurrency transfers can be completed in minutes and received directly on mobile phones. For families dealing with emergencies or urgent expenses, this difference can be life-changing. The agricultural sector in Africa presents another compelling use case for cryptocurrency that's often overlooked. I've seen examples of coffee farmers in Kenya using cryptocurrency to receive payments directly from international buyers, eliminating multiple layers of intermediaries. Cocoa farmers in Nigeria are using blockchain-based systems to prove the provenance and quality of their crops, enabling them to access premium markets. From a market analysis perspective, the African crypto markets present unique challenges and opportunities. Traditional technical analysis is difficult because much trading happens on P2P platforms that don't provide transparent order book data. However, on-chain analysis can provide valuable insights into adoption trends and usage patterns. The correlation between local currency performance and crypto adoption is particularly strong in African markets. When the Nigerian naira weakens against the dollar, Bitcoin trading volumes typically spike. When the Kenyan shilling faces pressure, stablecoin adoption accelerates. These correlations create trading opportunities for sophisticated investors who understand the macroeconomic drivers of crypto demand. For traders looking at the next 24 hours, the key factors to monitor include any regulatory announcements from the three major markets, currency movements in local forex markets, and volume patterns on major exchanges. The proposed crypto tax in Kenya is particularly worth watching, as any developments could influence adoption patterns across the region. Technical analysis should focus on Bitcoin's performance against local currencies, particularly the Nigerian naira and Kenyan shilling. Currency devaluation often drives crypto adoption, so monitoring forex markets can provide early signals of changing crypto demand. Volume patterns on major exchanges with African operations like Binance and Luno can also provide insights into market sentiment. The long-term investment thesis for African crypto markets is compelling, but requires patience and understanding of local dynamics. This isn't a market where you can apply developed market strategies and expect success. The drivers of adoption are different, the regulatory environment is evolving rapidly, and the infrastructure challenges are real. However, for investors who take the time to understand these markets, the opportunities are significant. The combination of young tech-savvy populations, inadequate traditional financial infrastructure, and growing regulatory clarity creates conditions for sustained growth that could last for decades. The key is to focus on projects and companies that are solving real problems for African users rather than those that are simply trying to replicate developed market models. The most successful crypto ventures in Africa are those that understand local needs. and build solutions accordingly. What we're witnessing in Nigeria, Kenya, and South Africa is more than just crypto adoption. It's the emergence of a new model for how financial systems can work in developing economies. The innovations happening in these markets today will influence crypto development globally and could reshape how we think about money, payments, and financial inclusion. The African crypto story is still in its early chapters, but the trajectory is clear. These markets are not just adopting cryptocurrency. They're innovating with it, building on it, and creating new models that the rest of the world will eventually follow. That's the power of Africa's emerging crypto giants, and that's why every serious crypto investor and enthusiast should be paying attention to what's happening on this remarkable continent. Thanks for joining me on this deep dive into African cryptocurrency markets. If you found this analysis valuable, please give it a thumbs up. Share it with anyone who might be interested in global crypto trends, and don't forget to subscribe for more content like this. The world of cryptocurrency is evolving rapidly, and Africa is leading the charge in ways that might surprise you. Until next time, stay curious, stay informed, and remember, the future of finance is being written in places you might not expect. The institutional adoption patterns in these markets are evolving in fascinating ways. In developed markets, institutional crypto adoption often starts with large corporations and investment funds. In Africa, institutional adoption is more likely to start with smaller, more agile institutions that are closer to the real economy. I'm seeing examples of microfinance institutions in Nigeria experimenting with crypto-backed lending. Agricultural cooperatives in Kenya are using blockchain systems for supply chain management. Small banks in South Africa are offering crypto custody services to their clients. These institutions may be smaller than global investment banks, but they're often more innovative and willing to experiment with new technologies. The technology infrastructure supporting African crypto adoption is also evolving rapidly. While internet connectivity and power reliability remain challenges, innovative solutions are emerging. Satellite internet services are improving connectivity in rural areas. Solar power systems are providing reliable electricity for crypto operations. Mobile network operators are partnering with crypto companies to integrate digital asset services into existing platforms. The developer ecosystem in Africa is particularly impressive. African developers are building some of the most innovative crypto applications in the world, often with limited resources but deep understanding of local needs. These developers are creating solutions for problems that don't exist in developed markets, like how to use cryptocurrency when internet connectivity is intermittent, or how to integrate crypto payments with existing mobile money systems. The exchange landscape in Africa is also evolving rapidly. Global exchanges like Binance have faced regulatory challenges across the continent, which has created opportunities for local and regional players. Exchanges like Luno have built strong presences in specific markets by focusing on regulatory compliance and local customer needs. Yellow Card, which positions itself as a pan-African crypto platform, has been working to build compliant operations across multiple African markets. However, even these regional players face challenges navigating the complex and often changing regulatory landscape across different countries. The venture capital ecosystem supporting African crypto innovation is also growing. Firms like We Capital are specifically focused on African fintech and crypto startups. This investment is crucial for building the infrastructure and applications that will drive the next wave of crypto adoption across the continent. Looking ahead, there are several trends that are likely to shape the future of cryptocurrency in Africa. First, we're likely to see continued growth in stablecoin adoption, particularly for cross-border payments and remittances. The practical benefits of stablecoins for these use cases are simply too compelling to ignore. Second, we're likely to see more integration between cryptocurrency and existing financial infrastructure. Rather than replacing traditional financial services, crypto is more likely to complement and enhance them. This could include everything from crypto-backed loans to blockchain-based trade finance. Third, we're likely to see continued regulatory evolution. As governments across Africa gain more experience with cryptocurrency, we should see more sophisticated and nuanced regulatory approaches that balance innovation with consumer protection. The energy sector in Africa also intersects with cryptocurrency in interesting ways, and many African countries have abundant renewable energy resources, solar, wind, hydroelectric, but lack the infrastructure to distribute this energy efficiently. Cryptocurrency mining is beginning to provide a use case for stranded energy assets, creating revenue streams that can fund further infrastructure development. In countries like Nigeria and South Africa, there are pilot projects using excess solar capacity for Bitcoin mining. This creates a virtuous cycle where crypto mining revenues fund renewable energy development, which in turn supports broader economic development. The seasonal patterns in African crypto markets are also interesting. Remittance flows often spike around holidays and harvest seasons, which can drive increased crypto adoption. Agricultural commodity cycles can influence crypto usage in rural areas. Understanding these patterns can provide insights into market timing and investment opportunities. The educational aspect of crypto adoption in Africa is also fascinating. Unlike in developed countries where crypto education often focuses on trading and speculation, African crypto education is intensely practical. People are learning about cryptocurrency because they need to use it for real economic activities. I've seen educational initiatives in Lagos where young entrepreneurs are teaching market traders how to use stablecoins for cross-border commerce. In Nairobi, there are workshops where small business owners learn to accept crypto payments. In Cape Town, university students are building DeFi applications that address local financial challenges. This grassroots education is creating a generation of crypto users who understand the technology at a fundamental level. The regulatory evolution in these markets is happening in real time, and the outcomes will influence crypto development globally. Nigeria's approach has been particularly instructive. The initial ban on bank crypto transactions in 2021 was widely seen as a failure because it simply drove activity to P2P platforms without reducing overall adoption. The government's subsequent pivot toward regulation rather than prohibition reflects a growing understanding that cryptocurrency adoption is driven by genuine economic needs that won't disappear just because of regulatory restrictions. The Investment and Securities Act of 2025 represents a more sophisticated approach that attempts to capture the benefits of crypto innovation while addressing legitimate concerns about consumer protection and financial stability. Kenya's regulatory development is particularly interesting because it's happening in the context of an already sophisticated digital payments ecosystem. The challenge for Kenyan regulators is how to integrate cryptocurrency with existing mobile money systems without disrupting the financial inclusion gains that M-Pesa has achieved. The proposed 1.5% transaction tax is controversial precisely because it could undermine the cost advantages that make cryptocurrency attractive for cross-border payments. South Africa's regulatory leadership in Africa is creating interesting competitive dynamics. By providing clear rules and licensing frameworks, South Africa is attracting crypto businesses that might otherwise operate in less regulated jurisdictions. This is creating a concentration of crypto innovation and investment in South Africa.